go one by one here. Let's start with NVIDIA. Obviously diverging a little bit from the broader sector, but it makes sense, right? They're the ones showing all the growth, and despite that, I guess the desire to see it broaden out to the Intels and the AMDs of the world by the market just has not necessarily happened. You mentioned sort of this perhaps correction that could happen. Do you see a world where that's just the rest of the market outperforming for a little bit and more sideways underperformance, or does it need to be an outright pullback?
I think you need a little bit. You don't. It doesn't have to be extreme. You know, we're not talking 25% or something like that in NVIDIA, but I do think you see it continue to go lower a little bit. Just this morning, I was looking at this stock at about 5 a.m. It was positive on the day, even close to up 1%, and now it's turned red in the futures. So I think you could continue to see a little bit of a pullback until we get another earnings report, or some positive news that goes in the direction. It really is rotation, though. I think it's due for some of these other names in the AI space, the smaller cap companies. Intel can't get out of their own way, but some of these other ones that could start to get some love. That's not to say that NVIDIA did not put up a great quarter. They did. They really did, and they have great backlog. And the Blackwell chips just seems like it's going to be off the charts as well, and there probably be more demand for that. A lot of these companies are still announcing massive CapEx expenditures that are going to go into this company, but it has to do with valuations. I mean, we have been seeing revenues grow by ridiculous amounts in this name, but just the law of numbers in the averages over time, those numbers have to come down. You can't just keep quadrupling and 10xing your revenue every single quarter. So those are bound to come down. I think investors are just kind of a little bit hesitant on this name that's been a high flyer, especially when some of those small caps names are starting to see some movement. And obviously investors want their money to go to the place it's going to be treated best.
We saw a minor recovery for NVIDIA following 2 days of sharp drops. Friday saw a 3.2% decline in shares, and Monday saw a further 4.2% decline in the stock. Tuesday saw the stock reverse 0.4% higher and get closer to a buy point. The stock has been fluctuating between a buy and sell zone since October, according to the data. Stocks should ideally climb after breaking out of bases rather than move sideways. In the midst of the Trump election euphoria, shares initially dropped after breaking out on October 17, but then rose above the buy point once more on November 6. The stock barely avoided falling below its 10-week moving average on Monday, but it is still above the line despite the volatility. It might attempt a third time to reclaim the buy point if it keeps rising. The methodology includes guidance on how to monitor various risks as well as how to purchase stocks based on strength. NVIDIA's strength is the growth of its earnings. Additionally, the stock entered at 140.76 and built a clear base. Because even the finest stocks don't rise straight up, bases and buy points are crucial. They will retreat after a significant advance before moving higher and establishing a base. They have a better chance of making significant advances in a shorter amount of time after they break out of the base. For market leaders, success feeds on itself, according to decades of research. NVIDIA's ratings can give investors some clues as they develop a strategy. With a composite rating of 97, the AI chip giant is a strong all-arounder and maintains its position as the market leader with an optimum earnings per share rating of 99. NVIDIA leads the S&P 500 in terms of projected sales and earnings growth through 2026, per FactSet data. Over the next 2 years, analysts anticipate that the S&P 500's revenues will rise at a compound annual growth rate of 5.7%, and its profits per share will expand at a pace of 13.8%. However, they predict that NVIDIA's 2-year compound growth would reach 35.1% earnings per share and 35.5% revenues. Sales for the third quarter totaled $35.08 billion, and the company made 81 cents per share. Estimates from analysts surveyed by FactSet were 75 cents per share on $33.17 billion in sales. Additionally, sales exceeded the $32.5 billion forecast for the quarter by the leader in AI chips. Compared to the previous year, when NVIDIA reported $18.1 billion in revenue, sales almost doubled. Earlier, ASML, a manufacturer of chip lithography gear, kept its lower-end sales goal of $46.3 billion for 2030. The news came after ASML issued a warning on October 15 that it expected demand to decline in 2025. As a result, Nvidia's stock fell by almost 5% during the day. According to Christophe Fouquet, chief executive of ASML, the company anticipates being able to contribute to the artificial intelligence opportunity and grow technologies into the next 10 years. Jefferies Group analysts thought the decrease in semiconductor demand was only temporary. Nvidia gets its chips from foundries that employ ASML's lithography equipment. Morgan Stanley analyst Joe Moore expressed worries about a chip shortage that would hurt Nvidia's earnings and forecast ahead of the company's release. Despite maintaining an overweight rating and a price target of 160, the analyst viewed the period ending in September as a transitional quarter. According to the analyst, the company's Blackwell chip could generate $5 billion to $6 billion in revenue for the January quarter. Funds have recently been reluctant to purchase the company, despite the fact that its price performance has outperformed 94% of other equities in Investors Business Daily's database. On an A+ to E scale, the accumulation/distribution rating, which gauges price and volume movement over the previous 13 weeks, is only a C. When comparing the stock to the S&P 500 index, the relative strength line has begun to sag. This indicates that Nvidia hasn't been keeping up with the index's recent advances. Piper Sandler analysts increased their price objective from 140 to 175 because they believe the stock would rise by 20%. Nvidia stands to benefit the most from the growth of the AI accelerator business as a whole, which Piper Sandler projects will reach $70 billion by 2025. Additionally, Melius Research analysts kept their buy rating and increased their price objective from 165 to 185. In terms of the Dow Jones Industrial Average, Nvidia has supplanted Intel. This stock is the fourth member of the Dow Jones Industrials to join the Magnificent Seven. The others are Microsoft, Amazon.com, and Apple. According to recent reports, there is still a considerable demand for Nvidia's AI chips. Big Tech's combined capital expenditures of $218 billion this year and an additional $254 billion in 2025, according to Mark Hayfall, Chief Investment Officer at UBS Global Wealth Management, augur well for the AI investment thesis. Meanwhile, Vertiv, which offers services and solutions to build AI data centers, exceeded profitability projections for its September quarter due to increased demand for AI data centers. Jensen Huang, the CEO of Nvidia, announced in October that a design defect in the company's next-generation Blackwell chip had been resolved. Yields were low earlier, but Taiwan Semiconductor, a manufacturer of AI chips, helped overcome this issue and resume Blackwell production at a remarkable rate. Following a 54.2% year-over-year increase in Taiwan Semiconductor profits, Nvidia's shares cleared a trendline entry near 139.60 on October 17. Apple and Nvidia both purchase AI chips from Taiwan Semi. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
How does the idea of bond yields play a part of this? I want to ask you, probably back in 2022, we were talking a lot about bond yields. We're talking about the stronger dollar. In fact, right now, the dollar's even higher than it was back in June of 2022 when Microsoft warned, when Salesforce warned. How did those things play a factor in this tech trade?
Well, look, on currency, clearly that's been, that could be a headwind. I think the difference now is that a lot of that's factored into guidance. Now, we got to see if that continues in terms of dollar strength. But we're in a much different situation today relative to, I think, what we're seeing from a demand perspective. That tightening environment that really actually was a big hurdle in terms of software, we're seeing the opposite of it because of where this AI revolution plays. So I think even though you could have some currency headwinds, it is not getting in the way of what I believe is we're going to be talking about NASDAQ 20,000. And I believe in the next 2 years, NASDAQ 25,000 is something that we'll be talking about.
So again, your picks.
For investors, Nvidia's earnings have become a major event. Considering the company's expansion in the last 2 years, analysts are interested in what each quarterly outcome will hold. For all investors, Nvidia's success is crucial because its ascent has been a major factor in the expansion of the larger stock market. The fiscal 2025 third quarter was impressive, and I believe there is a significant figure here that has the potential to energize investors once more. The Graphics Processing Unit, GPU, which is Nvidia's main product, is frequently used when extremely high processing power is needed. It stands out from other computing devices due to its capacity to conduct several calculations in parallel, which makes it an obvious choice for workloads requiring large quantities of processing power, such as training an artificial intelligence (AI) model. Since the AI arms race began, demand for its GPUs has increased dramatically, and Nvidia has profited more than any other firm in the industry. This was made abundantly evident in Q3, when revenue surpassed management's own projections by a whopping 94% year-over-year to $35 billion. In the third quarter, they only anticipated $32.5 billion, or 80% growth. Although the future appears bright, this is an incredible metric to focus on. Management anticipates $37.5 billion for Q4, which is a 70% increase. That is still an amazing number, even though it is beginning to decline. Since management has a track record of exceeding revenue projections, the actual amount is probably a little higher. With so many factors working in its favor, I wouldn't be shocked if Nvidia kept up strong guidance beats like that throughout 2025. The fact that a sizable portion of Nvidia's revenue is split among a small number of clients is one danger. About 40% of Nvidia's total revenue in Q3 came from 4 customers, who Nvidia did not name. It may be disastrous for Nvidia if these customers stop making purchases. It's easy to identify these businesses, though, and they all predict that expenditure will continue to rise in 2025. Meta Platforms, which predicted a large increase in capital expenditures in 2025, is one contender for these unknown clients. The majority of this expenditure goes into more processing power, which is advantageous to Nvidia. Amazon and Microsoft, 2 other prospective sizable customers, have similarly predicted that AI-related processing costs will increase in 2025. For Nvidia, this concentration is currently a benefit rather than a concern. In 2025, Nvidia will also benefit from the introduction of its Blackwell architecture. When compared to the current Hopper architecture, this new device offers an amazing performance boost. Because it only needs 64 Blackwell GPUs to run a benchmark test as opposed to 256 Hopper GPUs, Blackwell offers 4 times the performance of Hopper. Production at Blackwell is ramping up and is in full gear. Demand is far higher than supply, according to management, and revenue is already exceeding projections. At least from a growth perspective, these 2 significant tailwinds for Nvidia make a compelling case for purchasing the company. Investors should be aware of this danger, though, as the stock is still rather pricey overall. The price of Nvidia's stock is 51 times its projected earnings. In addition to projecting several years of robust profits growth into the stock price, that is by no means a cheap figure. The price you pay now isn't that high if Nvidia continues to expand at its current rate. However, it might become a problem if it experiences difficulties by the end of 2025. It all depends on how advanced you believe the AI build-out to be. If it's past its prime, Nvidia isn't worth the investment. But if it's just getting started, it can still be a good investment. Numerous signs suggest that we are only beginning to explore the potential of AI, which will lead to more investment in Nvidia, particularly with the introduction of Blackwell architecture. Even though I don't believe Nvidia will replicate its 2024 performance in 2025, I still believe there is a strong enough argument for Nvidia to continue outperforming the markets in the future. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Start out with a conversation about Nvidia. Although it finished lower for the day, it had some wins this week, although basically little change this week. What are your takeaways when it comes to Nvidia off the back of its latest numbers and its forecasts?
Yeah, and I think the forecast is really the most important point here, right? Because under any way, shape, or form, this company had delivered incredible results. But it's interesting, it's the first time in over 5 quarters the company grew less than 100%, their revenue less than 100% year over year. So the market took it a bit softly that it could only do around 90%. Now the forecast is where things get more interesting. We know that they've made it clear that in the fourth quarter they're going to be shipping Hopper and Blackwell systems. But of course, the market's now getting a little bit concerned are we going to see people sort of slow down their spending purchases? It doesn't appear as though that the hyperscalers look to be doing that for the time being. If anything, they told us that they were ramping up. So again, this is a name with so much expectations, so many people are following it, but it generally delivered. I think the challenge is that it didn't deliver above and beyond enough to really see the stock take a new leg higher for now.
Yeah, and I think one of the questions that had come up on the earnings call was about their margins, which of course are strong, but not quite as strong as they had been. And if they were going to be returning to the mid-70s when it comes to that, they said, yes, that would be the case. So that's why we did see a little bit of momentum off the back of their numbers. We saw, again, some tapering today. When we look at where the price action is today, what's the level you're paying attention to when it comes to the path from here? Where's the floor that you're seeing, or resistance that you're seeing?
Yeah, so it's interesting. So Nvidia is in a position where, because there's been, again, so much baked into the stock that almost, kind of traditional technical measures don't always do a good job of sort of guiding us. But resistance is firmly at 150. That's something that's been in place. It's flirted with that really throughout the month. Has had a hard time breaking through. I also look at the 137 mark. That's the interim low. It's kind of a good line in the sand of support here, because again, looking at just traditional 50 or 200-day moving averages doesn't really do it for this name because there's just so many people following it.
We'll examine NVIDIA's position in relation to other AI stocks that you shouldn't overlook. AI chatbots, which are currently the hottest things on Wall Street, are powered by large language models. In recent months, a number of hyperscalers have introduced their own chatbots and LLMs. Analysts eagerly await any information pertaining to these chatbots. A new standard for linking AI assistants to the data that drives them was recently introduced by Anthropic, an AI startup that created the Claude AI model. The open-source Model Context Protocol solution, according to the startup, would assist AI models in providing more accurate and pertinent answers to questions. The AI startup emphasized that as AI assistants become more widely used, the industry has made significant investments in model capabilities, leading to quick improvements in quality and reasoning. But even the most advanced models are limited by their data isolation, ensnared in old systems and information silos, the Post continued. According to Anthropic, MCP supposedly addresses this issue by providing a standard that lets programmers create bidirectional connections between data sources and AI-powered apps. The NVIDIA offers networking, computer, and graphics products. Since the business reported profits that outperformed the market, yet came in close to analyst projections last week, the share price has been volatile. Given that the stock has nearly tripled this year, Barron's, a finance news portal, has cautioned investors against reading too much into the initial reaction, which may easily be some profit-taking. Investors should disregard short-term noise, keep their eyes on the broad picture, and not lose sight of NVIDIA's success, which is of an unparalleled size, according to the journal. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community.